Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, I'm going to take you through the week ahead analysis, going to identify some news for the week and some top charts to watch. So going on to the news then, so we do have a little bit of news, especially in Australia. We have the RBA rate statement, and it is likely that the RBA will leave rates unchanged at 0.1%. This is highly likely. I don't see much change coming from the RBA, especially due to the recent declines in unemployment and GDP. So likelihood is that we'll leave rates unchanged at 0.1%. We then also have rate statements out of Canada. So we have potential for them to leave rates at 0.25%. Again, if it's forecasting, it's pretty much likely going to stay the same at 0.25%. In the way of dollar data, not much until Friday, so we might get a slow week again. CPI data out of the US is forecast coming a little bit lower, so we may see some opportunities to see a continuation of the downside to the US dollar, which we kind of had a bit of a mixed move last week due to the sort of data, but basically Powell is very much in line with speeding up the tapering measures, so it looks likely that they will do some action sometime soon. They have also taken into consideration the new COVID variant, the Federal Reserve, if we'd still get kind of a week where headline risks could be around, then we may see another sort of mixed range bound week for the US dollar. But we'll see how it plays out this week, because if we go onto the strength meter, we can see that the US dollar is actually starting to decline in that strength. So you can see here on the change table that we're still in the key reversal zones at the moment, and we're starting to see some downside in the US dollar. So we just need to see if that will continue and follow through this week. The yen was the strongest currency again, showing us that uncertainty remained in the market really, and we should see a potential for that to continue going into this week. The Canadian dollar was the weakest currency, dropping 4 places, as well as sort of the Australian dollar. But Aussie and Kiwi are in interesting areas. They're both at the lows, in an area where we could see the market sort of reverse and move back to the upside. So we could start to see a little bit divergence there in the currencies, especially due to the fact that seasonally the US dollar usually underperforms this time of year, and the euro or the likes of the euro typically gain through this seasonal period of December. So could be an interesting month for the US dollar. If we look at the dollar index on the weekly, we can see that we had that range bound week. What would that kind of signify is that there's just indecision in the market at the moment, lots of buying and selling going on. We can see that reflected on the 4-hour time frame, lots of range bound movement. So what I'd want to see from the dollar index is some direction. You know, if we can maybe sort of break out of this trend line, we could see some movement to the downside. Going on to euro then, so just the opposite of the dollar index. If we're going to expect a potential pullback in the dollar index, then we could expect a pullback on euro. Again, seasonally, this chart is quite bullish, so we could see a move back to sort of 115.15. And if that's the case, then what we should see out of euro dollar is a break of this trend line, and then perhaps some further upside to come. Euro pound then could be an interesting chart to watch. In the strength meter, euro gaining some slight strength, and pound losing strength. Again, euro seasonally strong this time of year. And what's interesting is the fact that euro pound is largely in a range, has been for some time, since around 2018, and prices recently retested the lows of this range. Could we start to maybe see another move back to the highs, potentially due to the seasonal period? We are kind of forming a consolidation at these lows. So, usually when we do see consolidative patterns
at key support and resistance levels, we often get a reversal. So I'm looking for price to really take these highs out and continue to the upside. What would that mean on the 4-hour time frame? Well, that would mean a 4-hour upward trend, which we can see at the moment. Ever since we broke out of these lows here, the market has moved to the upside. We came back, we retested structure, rallied. So I'm looking for either another retest of structure here or down in here at 0.85 for long opportunities on euro pound. Finishing on the S&P then, so despite all this sort of negativity around the new COVID variant, we didn't see too much aggressive selling. You know, if anything, it looks like a little bit of a retracement phase, and now we're back at the previous structure highs. So are we going to get another impulsive leg? You know, often when price comes back to this previous high, we get an extension up. So are we going to see another extension in the stock markets to come potentially? Again, what would that mean for us? Well, if the headline risks remain pretty minimal, then we could see a breakout of this double bottom pattern. If the market breaks the highs of the double bottom pattern, then we could see some more longs coming in on the S&P. So if that's the case, risk on might be in the market. We may see some downside to the dollar as well. So I'm going to leave it there. Hope you enjoyed this video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to watch some more of our Forex content, and I'll speak to you in the next video.